there is some real downside risk to this going down to 18 or so. I don't think it'll break this trend line here, but if it does, as Rick Rule says, that would be a back up the truck moment.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for July 4th through July 11th, 2023, while supplies last. This week we featured 2023 Silver Philharmonics at $3.79 over spot, and Ital Preziosi 10-ounce silver bars at just $2.79 over spot per ounce. First, frequently regarded as one of the most beautiful sovereign coins, the Austrian Philharmonic portrays instruments from the Vienna Orchestra on one side and the grand pipe organ from the famed Augsburg Golden Hall on the other, all in 3/9 fine pure silver, with a face value of €1.5. These 2023 Philharmonics come 20 to a tube, 500 to a box, are just $3.79 over spot, and are IRA eligible. Next, our Ital Preziosi 10-ounce silver bars not only maintain a great level of liquidity, but also boast one of our lowest premiums in months, at $2.79 over spot per ounce. They come individually numbered, are available in any quantity, and come 50 to a box. Both our specials this week are IRA eligible. And if you'd like to learn more about a precious metals IRA, call us and we'll be happy to help you in that process. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Steve Barton from the In It to Win It YouTube channel. Steve, thank you so much for joining us today.
Elijah, thank you for having me back on the show.
Well, it's great to have you today. I did want to discuss, it seems like we might be seeing a turnaround in precious metals. It hasn't been very positive for the last month or so, but your perspective where we are right now on gold.
Yeah. Okay. I'm going to share my screen here, and we'll go right to the charts. And what's really interesting here for gold is last time we were on the show, we were up around 1980, I believe, and we saw gold coming down. The next level of resistance after that was 1950 and then 1900. Well, we've touched 1900 and just kind of been trading right along this trend line right here. I'm sorry, this moving average. But if we go back to this triple bottom right here at 1615, so we hit it once, twice, and 3 times. And what's interesting about this third time right here was this bottom on November 3rd coincides perfectly with the Fed funds rate and when they did a hike. So if we go here to November 2nd, okay, they raised 75 basis points. And Jerome Powell was talking at that time saying that, you know, he could see the Fed slowing the rate of increase, raising just a little bit less. Well, gold sniffed this out. So this was November 2nd, and we can see that gold sniffed this out the very next day on November 3rd. And after that, we've just been in a gradual trend up. So gold kind of sniffs this stuff out ahead of time. And I think they're going to be doing the same thing here. The Fed is going to be increasing some rates, it looks like. I mean, if we go to the Fed Watch tool and we take a look at what they're forecasting. So the smartest traders in the world, 92.4% of them as of the time of this recording, believe that they're going to raise another 25 basis points on their next July 26th meeting. Now, if we go out on each one of these after that, the bond traders don't think that they're going to start cutting until May 1st. Not great for gold, right? If you have if they're going to be giving you a bigger interest rate on treasuries and bonds, then there's no real reason to hold what Warren Buffett would call a pet rock that doesn't pay you anything. People can put their money into money market funds, they can put them into treasuries, and they can get a real return on that, something that's guaranteed. You can't necessarily do that from gold. But we can also see that gold sniffs this out before it happens, just like it hit the bottom when the Fed didn't even pivot yet. They just simply stopped increasing the rates quite so rapidly. And that's when gold hit a bottom. So I think that gold's going to turn around. I think in the near term, what we've got is we've basically got a little bit more consolidation. I think that, 1900 is kind of the level that we're watching right now. I could fully see it going down to 1850. I do not expect it to go below that. That would also line up really nicely with the 40-month moving average, which by the time it got there would be around 1850. But I think that's going to be probably a really, really good entry point.
And as for silver, I know when gold moves, silver is typically more dramatic. So if we see a move to the upside, it could mean fireworks for silver. Your perspective looking at the chart right now.
Yeah. Okay. So we'll pull up silver. We're just north of $23 here. We're probably going to close out the week at that. We got another hour and a half of the markets being open, but I think it'll hit about that. We've got some real resistance above silver here. I mean, you can see all these moving averages. It's got to get through to break up north of 24. But if you look at this long upward channel right here, right? So this was the November 3rd in silver, and you remember what that was like in gold. That's darn near a bottom. I mean, it's within a buck or so. I think that silver could touch this trend line. If it does, I think that'd be another great entry point. But there is some real downside risk to this going down to 18 or so. I don't think it'll break this channel, this trend line here. But if it does, as Rick Rule says, that would be a back up the truck moment.
And what kind of events do you think could make it fall lower from that trend line there?
Well, the Fed could continue increasing interest rates. They could do that. I mean, Jerome Powell's got his foot on the gas and he doesn't seem to be taking it off. So that wouldn't be good. The DXY has been holding up better than I thought it would. We're at the day right now, I think we're at 102 or 103. The European Central Bank is increasing their interest rates. They just had another hike a couple weeks ago. So basically the way the DXY works is, it's a conglomeration of currencies that we it's just fiat currencies being compared against each other. And in the DXY, you got 58% in the euro, 13% in the yen, 11% in the British pound. And as those currencies become stronger, then the dollar will become weaker and vice versa. So since they're still increasing their rates, that's, it's not great for gold in that. We kind of need the dollar to drop down, and then it will take more of those fake fiat dollars to purchase real money, gold.
The other precious metal that a lot of people don't talk about is platinum. Some people don't like it because it's not a monetary metal, but there are a lot of bullish fundamentals. And right now we're seeing a significant pullback. It's been around $900 in the last couple of weeks. Your perspective on platinum right now and some of the bullish fundamentals for that?
The fundamentals on platinum. If you go to the World Platinum Investment Council, these guys study this. They put out a quarterly report every quarter. And their last quarterly report was that they are anticipating almost a 1 million ounce deficit this year. So they expect the world to pull out of the ground about 7.1 million ounces this year, but they anticipate and they forecast that the demand is going to be 8.1. So that's a huge chunk there, right? To put this into perspective, as far as how tiny the platinum market is, they're only pulling out, they anticipate 7.1 million ounces this year. Well, Warren Buffett, with his current net worth, could buy the total physical supply this year 17 times. All right, this is a tiny market. So I don't see a scenario where, that doesn't make the price go up. It's got a pretty good floor on it. It's probably not going to go down much more. But if that deficit actually takes place, then the price is going to go up. Another fundamental part of it that I like a lot, and this is what really gets me excited, is when you look at where platinum comes from, where the mines are, and what countries are sending this and selling it out to the world. The number one by far is South Africa. They are going through huge political turmoil right now, and the way our country is throwing out sanctions like candy, I could certainly see a scenario where we could sanction South Africa, and they produce 68% of the world's platinum. Now, guess who's number two on the list? Russia. And they produce 16% of the world's platinum. All right. So the two biggest producers of platinum, the U.S. is not friendly with. And number 3 on the list, we are also not fans of, or our politicians aren't, is Zimbabwe. All right. So if some of these sanctions go out against these countries, if South Africa, which is experiencing radical brownouts and blackouts, if that starts to affect the mining company, that is only going to be bullish for platinum in such a tiny little market. And the beauty of it is when you look at the gold to platinum ratio and you look back over the course of the last 100 years or so, some of that data you can't really go on in the 1930s and the 1970s simply because gold was fixed. So, when the price of the other metal goes up and gold is fixed at $35 an ounce, then, that's not going to, you can't really go on that one. However, if you look back over the last 30 years, there has been several times in history where that ratio has gone to 2-to-1. So in other words, you can get one platinum coin and trade that for 2 gold coins. Right now, it's the opposite. You got to get 2 platinum coins to get 1 gold coin. I think eventually that ratio is going to reverse. And if we go to 2x, that'll be a 4x move from current prices. If it just goes back 1-to-1, then that'll be a 2x. So I like platinum a lot. I think that it is, it's a speculation, but it's a bet in which your floor, I think, is pretty much right around where it is now. And your upside potential could be as high as 4x.
And if you wanted to share the platinum chart for us here, because, it really is near the lows of where it's been in the last couple of years.
Yeah, so this is a proxy for the platinum market. This is a platinum trust, essentially like, the Sprott physical platinum and palladium trust. This is simply platinum. You don't have the palladium in there. But we made a purchase last week, so you can see we got a nice double bottom here in platinum with the ratio at 0.47. This would be a quick, easy way that you could play it, or if you want to play the safer bet, just get the physical stuff. But I think our risks to the downside is pretty low. And if history repeats itself, I think we're going to 2-to-1, which at current prices that would be a 4x move. Even if we just get back to 1-to-1, I mean, that's a 2x move, but that's not a bad deal.
Definitely. And obviously, this is a speculation, no guarantees here. But as you mentioned with the platinum gold ratio, it's a very strong case there. I did want to get your perspective on uranium. I know you have mentioned that the uranium Sprott Physical Trust is actually at a discount right now, which is pretty interesting. Full disclosure, I do own that ETF along with a uranium energy company. So just full disclosure for our viewers there. But if you could discuss the bullish fundamentals for uranium right now, and also what is happening right now with the Sprott Trust.
All right, so the Sprott Physical Uranium Trust, I am pretty excited about, and so much so, we even made another purchase this morning. And if we look right here, this is the technical chart. You can't go too much by the technical charts on a commodity like this, but we are hitting along a bunch of moving averages. And more importantly, if we go to the Sprott Physical Uranium website, we can see what their discount right now is to NAV, right? So what the spot price of uranium is and how much you can actually purchase this yellow cake from Sprott at. Now, if I broke this down and did the math here, and right now, according to John Quakes, the spot price of uranium is $55.60. But you can purchase that at a 13.2% discount from Sprott, so your cost is only $48.22 per pound. Now, the beauty of this is there's 2 markets here. I knew there was 2 markets before, but I didn't realize how much of a difference there was in price. Okay, so we had Rick Rule on the show last week, and we learned that in the term market, so there's the spot market and the term market. In the term market, it's selling for about $60 a pound. Right? But the spot market is only $55.60. And if we purchase it right now, we can get it at $48.22 a pound. Okay. Well, the term market is trading higher. And he said about 70% of purchases for utilities are buying this uranium. They're buying it off the term market. So they're paying $60 a pound. and the other 30% is going into the spot market. So if we do some quick math and you just take 5560 times 0.3, and that'll give you, for every pound that they buy, this much of it that's the amount coming off the spot market, and this is the amount coming off the term market. Okay, so your average cost right here is $58.80. It only costs you $48.22. So your true discount is 18%, not the 13.2 that Sprott is advertising. It's even better, right? Now, this is what Rick Rule said. We all know Rick is pretty conservative, okay? I talked to some other uranium experts. Andrew Weekly, we're having him on the show here at the end of the month, and our resident uranium expert, Justin Hune, and they said it's closer to 75% on the term market. And Justin said it's even better. He said it's north of 85%. So if we run those numbers, and he also said that the term market price is the mid 60s to high 60s. So that's even better than $60, right? So I did the math for $65 on the term market, and I did the math for $69. And look at these discounts, 24.2 or 28%. So if we go by the conservative numbers of Rick Rule, the discount, instead of being 13, is actually 18. If we go on some of the aggressive numbers, it's 28%. I think uranium is a screaming deal, and one that we're going to look back on in time and be glad we made the purchase.
Again, for our viewers, would you remind our viewers kind of the bullish fundamentals you see for uranium right now?
Okay, fundamentals on uranium. This is exciting. Okay, so we burn about 200 million pounds of uranium in all 430 nuclear reactors across the planet every single year. Well, what we're actually mining out of the ground, the numbers I've heard are between 127 to 130 million pounds per year. So there's a deficit there of about 70 million pounds. If there's not enough coming out of the ground, then that means that Cameco and Kazatomprom, the two 800-pound gorillas in the room, are not going to be able to make up that 70 million pound deficit. So what has to happen is a lot of these junior uranium miners have to come online. And if you can find out which ones are most likely to come online in the near future, when they do come online, some of these miners, like Uranium Energy Corporation, that you mentioned, they're profitable at $60 a pound. Well, the spot price right now is 56. In order for them to come online, the price has got to get up to 60. And then that's going to introduce another couple million pounds, right? And then what's the next one? The next one that's profitable is at 63, and the one after that is 68, and the one after that is 75. So until the price of uranium can increase so that these juniors start coming online, it's like Rick Rule says, either the price of uranium goes up or the lights go out.
No, I think that's a very good case there. What are some of the, numbers you're looking for uranium in the future? This kind of presupposes is that there's not another nuclear accident in the near future. But provided that there isn't, what are some of the numbers your guests are looking at? Around
75, 80, 85 bucks a pound, I think would be the point to start really rethinking your position. That might be the start to trimming what you got. One of the no-brainer ones that I got from Warren Irwin was, he said, once you get about 200 junior uranium miners out there, that's the time to really start re-looking at it. That's kind of the no-brainer one. But I think basically what we're looking at is we're looking at price. And once that price gets up to around 75, 80 bucks, it might be time to start taking some money off the table. This could have another run like it did before, go up to 140 bucks a pound or something. But at some point, you got to pay yourself.
Definitely. And when it comes to the general stock market, before we let you go, if we could get your perspective on that. I know I just interviewed Bob Moriarty, that'll be going up tomorrow. And he was talking about how, the sentiment, people are very bullish on stocks right now, which is not a good sign. Your perspective on where we are right now.
Okay, we'll pull up the S&P 500 right here, and this one is pretty interesting. So we've got right now, we are just touching on the door of 43.50. Last week we closed at 44.50. That's the next major level of resistance. We got a double top right here, so I drew this white line as far as a resistance line. The next one after that is going to be 4,500. In the near term, I this is a very bullish looking chart to me. I mean, just like when I was on last time, each one of these moving averages is in sequential order, with the exception of the 400. We got the 200, the 150, the 100, the 50, the 21, and the 10. I mean, when you put them all in sequential order like that, each one of those, you got to think of them like it's a little soap bubble, right? And the bigger the moving average, the tougher the soap bubble. And so there's a lot of support under this thing. And it's just market sentiment. I mean, I think right now we got a real bubble in the tech stocks. So basically the S&P 500, there's about 7 or 8 companies that are holding the whole thing up, right? A lot of these AI technology companies, NVIDIA is a great example, okay? Right now their share price is $430. Their PE ratio is 219, okay? And their dividend is 0.04%. So to put that into perspective, for every $430 that you invest per share, you're going to get 16 cents per year on that. Now, compare and contrast that with maybe an oil royalty company like Blackstone Minerals. They have a share price now just south of $16, and they're paying a 12% dividend, which for every 16 bucks you put in, you get about $2 a year for it. That's a lot better deal. I get questions all the time. In the last month, I've been asked more questions about tech stocks than I've been asked about stocks, period. So if that doesn't define a bubble, I don't know what is. I think basically, if we go back to the chart of the S&P 500 here, I don't know how much longer we can last in clown world. I got to believe that, this is just unbelievable. I've been floored by the strength of the market, but as long as we're still in clown world, just like we were back in the .com bubble, I don't see the brakes getting put on this anytime soon. I really don't. This is super bullish. I mean, it wouldn't surprise me at all if we take out these two. It just basically turns on it. Like once the recession starts hitting, everything gets sold. This is going to get sold. Gold and silver for a hot minute will get sold, but that'll be the back up the truck moment because they're going to recover far faster than the general market.
Fantastic. Well, Steve, we really appreciate your time today. Very interesting times, as you've shown us. Before we let you go, where can our viewers find you online if they're interested in learning more?
Yeah, if you could do me a favor and just put a link down in the show notes to our YouTube channel. Every Sunday we come out with Monday Market Moves, so we talk about what happened last week in the markets and what we expect for next week. During the week we interview gurus just like you do, Rick Rule, Peter Granich, Justin Hune on uranium, Doomberg. We usually put out a submit the questions for our next guest so the Hive can submit questions. And it's a boys club. Over 98% of our viewers are men, and we're just a bunch of guys sitting around, making finances fun and exciting, and, how to make money from it and early retirement. So thank you for letting me come on the show, Elijah, and you have a great rest of the day. You too. Thank you so much, Steve. Take care.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.